This is Andre Banks coming today for Banks Credit Chat, giving you 5 reasons why a creditor might close out your account, which you catching you off guard and you unsuspected of why they might do these things. 3 of them, they typically won't operate in that. In times of the past, they wouldn't operate in closing the account out. But with creditors, they are becoming much more mindful of who they're lending out, issuing credit to, and just how they're going to get their money back. And they're doing more due diligence. They will now search for these different reasons. With that said, let me give you the 5. The first one is that they suspect fraud. If you lied on your application and they found out that some of the information you have provided does not to be true, as soon as they open up, they can close out that account. That's one big issue. 2, if you haven't used the card in, like, say 60 to 90 days, they can close out the account. They want to see that you're utilizing the account. They might find you more as a risk, or just why even have that open if you're not going to utilize it? We can't get any money from it, especially 90-day mark is usually what they typically have done. What's going on? I shouldn't say typically have done. They do it now, but usually it's about 6 months. But they've closed it out in 90 days. Sometimes I even see them close it out as early as 30. But if you're out using the card, they can close out the account. 3 is if you are over the limit, and when I mean over the credit limit that they provide for you. And I'm talking about not a large amount. It could be only $100. They find you as a risk, they'll close out the account. Number 4, if your credit score goes down for any reason, they'll close the account out. Again, that may not be a typical in times of the past, but this is what's happening now. 5, if you find yourself 30 days late. If you have not made a payment in about 30 days, they can close the account out. Now, I do want to put this disclaimer as there's no guarantee that they would do that for any of those reasons, but these are the things that I'm finding out now in the new economic climate that we're in, where creditors are closing out accounts, which has effect on your utilization score. Now, you can do some things to try to open them back up. And one of the caveats is that you can try it. They're going to ask you for your social security number, your name, your address. You got to provide that information, which is okay, fine. So you're trying to open those accounts up again. You also may find, if you're opening up the account, reissuing, they open up the account for you, that your limit, the credit limit you had before, may not be the same credit limit. If you had a card that had some advantages for it, like travel advantages, they may not be able to provide you the same travel advantages they did before. And the interest rate definitely could change. It could be more on the higher end. So these are the things, if you find yourself closing out the accounts, let's say that you haven't utilized the card for a while and you want to open up the card again, this is typically you haven't used it about 6 months, 8 months, they can then change the terms that they had before in those 3 different areas. One is any kind of, it's not guaranteed, but they would do this, but they can lower the limit, fees and interest rates could change, and some of the perks and advantages you used before, if you have a mileage car or something like that, may not be the same or may not be applicable. So those are the 5 different reasons why you can they close the account out. I'll go through them real quickly again. 1, they suspect fraud. 2, you're over the credit limit. 3, you have not made a payment in the last 30 days. 4, your credit score drops for any reason. And 5, you haven't made over the credit limit, or you have not made a payment. You're behind by 30 days in terms of not making a payment. If you try to open up the accounts again, do not, you haven't paid the card. I'm sorry, you haven't utilized the card in the last 90 days, usually 6 months or so. We close out the account. So I kind of jumbled the last 5 different reasons, but if you listen to the whole video, you could hear them again. I'll just go through it one more time. They find any manage of you doing any kind of fraud on the account. If they suspect that, they close the account out. You're over the credit limit slightly, it could be over $100. 3, if you haven't made a payment in the last 30 days. 4, if your credit score drops. And 5, you haven't utilized the card in the last 60 to 90, or actually not 6 months to 90 days. And depending on how their creditor utilizes it, they can close those accounts out. If you do find yourself trying to, especially for the one if you haven't utilized it in a while, which is the easiest way to try to reapply to see if you can open that account up again, be aware that they can change they will more than likely change the interest rate to not to be more in your favor. It could be at a higher rate. Some of the fees may change, more than likely. Some of the credit perks that you had before the card closed may or may not be available for you, and definitely that just those two things alone are enough to be mindful of if you're trying to reopen, especially if you utilize a reason that you haven't used the card in the last 6 months or so. Something for you to be aware, and something to be just mindful of. If this video has been any value to you, please subscribe, leave some comments. And for my next video for Banks Credit Chat, I'm out.